Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
Hello, welcome back. This is the Blockchain Show. Thanks for tuning in with me. My name is Ethan Kinderconnect. I'm your host. And today we've got a very special guest. I'm speaking with William Quigley, co-founder of the first ever stablecoin and most traded cryptocurrency in the world, Tether. Also the co-founder of WAX. Got a lot of fun and interesting things to get into, but I want to welcome you to the podcast. William, thank you so much for being here.
I'm glad to be here. Thank you.
I just want to give you the opportunity to say a little bit about yourself to our audience and maybe kind of bring us up to speed on how you came into this world of blockchain.
Sure. Thank you. I guess you could go back to the late 90s when I was a venture capitalist. I had co-founded the world's first venture capital firm that was focused on consumer internet. That's all we did. And that seemed at the time to be a crazy thing. And many people said, hey, even focusing on the internet is sort of way too narrow, but consumer internet, when that fad ends, you guys are going to be out of jobs. So we felt differently. And I think history showed that we were right to have thought differently. We made a number of outstanding investments during that time, music investments like MP3, a bunch of e-commerce companies, things like Net Zero, and then payments. My first payment investment was PayPal. We really were looking at the internet in the early days, this is 96, 97, 98, as a place where there was going to be a ton of consumer-facing applications, but also there would be a need to build out a massive amount of infrastructure. And to put things into perspective, I believe in 1999, there was $300 million spent globally on advertising on the web. And I would guess Google does that in a day, maybe in less than a day now. And so we just looked at it as a brand new platform that was going to enable lots of people to do things they couldn't have done before. During that time, I had made some investments in what was called magic internet money. These were companies that had figured out that micropayments was a really smart way to do things on the internet, but there was no way to do it affordably. And for people who aren't in the payment industry, they never really think about why is it you can't, spend 50 cents or $1 usually on a credit card transaction. And the reason is because the base costs are more than that. And of course, anyone using Ethereum right now probably understands that. Sometimes your transaction that you're doing is less than the fee you're paying. So we thought a lot about payments. Of course, there was no blockchain back then. And what happened with those companies is they went away because no one really knew how much coin they were printing. But the idea stuck with me. And also during that time, I got acquainted with some people who were working on video game applications, and in particular, allowing people to buy and sell virtual items, video game virtual items for fiat money. In fact, my partner, Jonathan Yantis, was the first person to create a marketplace that allowed anyone to buy and sell in-game virtual items using money. And that, of course, became a very big industry, and his company became very big as well. I eventually got on the board of that company and learned all about why people buy virtual items, what they do with them. And at the time, by the way, video game virtual items all had in-game utility. You did something with them. And for reasons we might go into, that capped the size of the market. But eventually his company got very big and he sold it. And that was about 2009. And then in 2009, he also, after he sold his company, read the Satoshi white paper. He was fascinated by it. And he kept trying to get me interested. But all investors have scar tissue when they do different investments. And I had scar tissue from these magic internet money ideas back in the 90s. And I thought I understood why something like that wouldn't work. And it took a while. It took maybe a year and a half. But he finally said to me, look, and I need a couple hours. Can we just sit down and talk about Bitcoin and the blockchain? And it turned out I had worked on blockchains, but they weren't really called that. But when I was a banking auditor in the 1980s, we would use the concepts that blockchains use, which is taking hashes of totals, whether they're daily deposits, weekly deposits, monthly deposits, and storing those hashes somewhere securely. And then you wouldn't need to refoot and recheck prior historical data. You could just make sure that the hash was working. And so I understood that basic concept. But of course, the brilliance of Bitcoin and those or that person who created it was they combined a blockchain with a token so that you could actually decentralize it, because you could get people to do work in a decentralized manner because they're getting a token. No one knew if it would be worth anything, but I mean, it was a fun experiment, and obviously it did work out. But what I did with my partner in the very early days after he finally convinced me was I said, look, let's do what I had done with the internet, the consumer internet at the beginning. We created a bunch of companies. We worked alongside an incubator. At the time, it was called Idealab Capital Partners. It was the most prolific incubator, and really the first concept of an incubator that hit the mass market was Bill Gross's Idealab incubator. And my firm, Idealab Capital Partners, basically helped incubate these companies. And we could come up with ideas really faster than we could build them out ourselves. So the incubator concept made a lot of sense. And we applied the same concept to blockchain. And so we had lots of ideas, many of which we borrowed from the early days of the internet. What did you need? You needed an infrastructure layer. You needed a way for people. You needed a place for people to go. Websites. You needed wallets and payment capabilities. Of course, you needed something for them to do with this crypto. And frankly, that wound up being the most puzzling thing of all. Other than a poor money substitute, which Bitcoin is, there wasn't that much to do with it until a very smart guy created Satoshi Dice. I believe that's probably the first real application for the use of a Bitcoin, and very successful at getting people to spend their Bitcoin. But we did payment processing companies. We invested in exchanges, and then we started to really think a lot about the blockchain technology itself. And that led us to help create something called Mastercoin. And Mastercoin was the very first ICO, but it was also the first attempt to put an intelligent layer on top of a blockchain. The only mistake we made with Mastercoin is we tried to do it on top of Bitcoin. And the Bitcoin core developers are not terribly imaginative, and they couldn't understand why anyone would want an intelligent layer on a blockchain. And so we did launch one thing on Mastercoin, and that was Tether. We came up with this concept, hey, why don't we tokenize the US dollar? And as you mentioned, I mean, that is the first stablecoin and the most traded crypto on Earth. Last I looked, it traded about $12 trillion annually. But the team that was working on Mastercoin said, we just should create our own blockchain so we can't be bullied. And they called it Ethereum. And so then we became the second largest investors in the Ethereum crowd sale. And we still hold lots of Ethereum, and we're big believers in Ethereum. But we also have a philosophy, which is that anytime you build something, it will ultimately be usable and adopted for a primary purpose. And its secondary purposes will ultimately be neglected. And I know this is controversial among the crypto maximalists. I don't really understand those people who think that you need one blockchain and only one blockchain, and you'll do everything on one blockchain. That's not how anything else works. And it's certainly not how blockchain is ever going to work. And so we had actually acquired in 2015 another video game virtual item marketplace. But this time things had changed because now virtual items in video games no longer were strictly for in-game utility. There were cosmetic only video game virtual items. These we call skins. So we acquired what became the largest skins marketplace in the world called OpSkins. And we realized very quickly that it would be a lot better if we could put this on a blockchain. But Ethereum was clearly not the best choice. So in 2017, when we talked to one of our friends, Dan Larimer, who was building out EOS and had come up with this concept of a proof of stake known as delegated proof of stake. That intrigued me. I thought it solved a lot of the problems that we were encountering with Ethereum. And so we used, when we launched WAX, initially we ran WAX on Ethereum private chain, and we confirmed everything we thought. It didn't work well. And then when Larimer finally released delegated proof of stake, we took that and we built WAX on that. And it's been marvelous. We processed over, I think 100 million transactions of virtual items. And of course, when we were doing the WAX ICO in 2017, and we were talking about virtual items and art and how things like non-fungible tokens were going to really enable a brand new wave of consumer applications. I will tell you, very, very few people thought that was interesting. And frankly, even as we've been signing up many corporations, big consumer products companies, it was only until about, I would say 2 months ago, maybe in mid-January of 2021, that we had suddenly everybody saying NFTs are great. And I'm like, yeah, they are. And they do a lot of things, and they aren't just art. And if you're building an Ethereum-based NFT platform, I think you're going to be disappointed, because I think ultimately Ethereum is going to be great for DeFi, but I think it's going to be, DeFi will eclipse everything else. And ultimately, NFTs will be neglected. The NFT standards will be neglected on Ethereum. So that's my theory based on many decades of business. And so, and I think if you look at the two biggest chains for NFTs today, WAX and Flow, neither is on Ethereum. So I think we were probably right there. So that's a little bit about my background and how we got to today in NFTs.
That's fantastic. I really enjoyed that. I mean, it just seems like you've been at the right place at the right time, or you've had your finger on the pulse, as they say. It's astonishing. That career is really impressive.
Thank you.
I think it was about 3 years ago we spoke with Malcolm Cassell about WAX.
Oh,
I remember thinking this is going to be the future, because at the time it was kind of the swan song of my video game. I don't know what you would call it. I had to grow up, so I didn't get to play games like I used to. But I remember thinking, man, I wish this would have been around just 10 years sooner.
Oh yeah, yeah.
Very cool stuff. And now I'm reading things in different online news sources about NFTs. There was a Saturday Night Live skit about non-fungible tokens. I couldn't believe it. I mean, this stuff is just blowing up. You were there early on. And I'm wondering, did you think there was some technology coming that would kind of make all of this not only possible, but just work? Because I remember when you were talking about your partner explaining these things to you, and you were initially hesitant because of the scar tissue of, as you mentioned. What was kind of that moment when it all clicked and you kind of realized that this has potentials across other industries, this technology?
I would say you could, it was a series of things as he was describing it. Now, remember, back then, this goes back, 10 years ago, it wasn't like you could go on any news site or YouTube and read all about Bitcoin blockchain and different consensus mechanisms and what applications might be useful. In fact, not 4 months ago, 4 months ago, I was talking to a very, I think, well-informed venture capitalist, but who didn't do much in crypto. And he said, it's too bad there's just never been any use cases. And I was like, man, what planet are you on? There are more use cases than I even saw in the early days of the internet. I mean, DeFi alone will be multi-trillions of dollars. And no use cases. How about freaking stable coins? If crypto created just one thing, which was the stable coin, it would be worth trillions and trillions of dollars. There are very few things that you can look at and say there is utterly no downside and only positive things out of this thing. Usually in life, we're used to trade-offs. There are no trade-offs with a stable coin. It is only good. And I think it was, when we did Tether, it was a year of explaining, not to no coiners, not to people who didn't know what a blockchain was, but to crypto people. Crypto people, we would explain what Tether was, and they would say, I don't get it. Why would you need that? They would say things to me like, but William, dollars are already digitized. They can already move at the speed of light. So how does Tether add anything? And of course, I would say, you don't know what tokenization is, do you? You think tokenization and digitization are the same thing, and you don't know payments. And so when my partner Jonathan was telling me about all these attributes of blockchain, frankly, I was able to pull from my years as a banking auditor, my time at the Walt Disney Company when I was, CFO of the licensing group, the merchandise licensing division. So I had to figure out how to deal with counterfeiting and the notion of magic internet money and the real problem it had, which was you couldn't account for it, and even video gaming, which you have experience in. When the dawn of skins came around, where there was no in-game utility, they were strictly cosmetic items. The reason why we both loved them, but also had issues with them as gamers was they were cool. They allowed us to be expressive. They were unique. A lot of skins are literally unique, but you never knew how many skins the video game company was making because they don't have a ledger. And frankly, they don't want you to know. And when they tell you we have a limited edition, whatever, you know what? It's limited edition unless a lot of people want to buy it, in which case they're going to sell as much as they can. So the ability to keep people honest, and a very unsung and I think underappreciated aspect of blockchain, which is the ability to verify a thing instantly at no cost with no expertise. That is extraordinary. And I would suggest there is no other thing on earth that does that. There is certainly no other precious thing. A piece of art, good luck. How about a diamond? With industrial diamonds and the processes for making them what they are today, first, ordinary people wouldn't know the difference between glass and a diamond. And now even the Gemological Institute can't really figure out, it's all statistical, whether something was an organic diamond or made in a factory. Gold, I laugh at gold people who tell me, well, but I have gold and I can use gold instead of this Bitcoin thing. And I know it's scarce. And, what I always say to them is, if you want to send me $100 of gold instantly, how do you do that? And by the way, even if I was standing next to you and you handed me an ounce of gold, how on earth would I know if it's real? And I laugh at the guys who say, well, you can take it to a firm and they can assay it. Yeah, when's the last time you went to the local assay office? And can you even trust that they're not a scam themselves? So the ability to literally take a $60,000 Bitcoin, have you send it to me, and me instantly be willing to send you money for it without any verification or cost. That's extraordinary. Those things I appreciated in the first couple of hours when my partner really laid it out for me. And that's when I started thinking, okay, what is possible to do? And it was another year before we started thinking about tokenizing dollars. And once we thought about that, we thought, wow, that will solve so many problems with payments, particularly international payments. Most people, I think, especially Americans, have no concept of the cost of currency conversion. They also have no concept of chargebacks. If you're a vendor, particularly if you're a virtual item vendor, as I've been for many, many years, you get paid with a credit card and then you send somebody a Bitcoin or a skin. How do you know that that credit card isn't stolen? And generally, it's going to be stolen if you don't have a massive amount of processes in place. And even if you do, you're going to accept a large amount of fraud. And criminals love using stolen credit cards to buy crypto and to buy virtual items because they're bearer instruments, right? Once the guy sends it to you, he can never get it back. And that inability to rewind the transaction, the immutability of a blockchain is both an incredibly positive aspect, but also that does have a negative, right? Because if it turns out the credit card the guy gave you was stolen, you can't rewind and get that Bitcoin back. It's done, which is why you see a lot of restrictions when you try to buy crypto with a credit card. It's not because people haven't thought of it. It's because the fraud is rampant. There's ways to fix it, and we're starting to do that. But I think with Bitcoin blockchain, it had a lot of limitations, mainly because they didn't have an intelligent layer on top. With the dawn of that, with Ethereum kind of pioneering the way for programmable blockchains, I'd say it was just a matter of time. We're still not there yet, right? There's still issues with blockchains, but I suspect over the next 3 or 4 years, we will be able to do things with blockchains that are quite fast relative to how we think today. It'll never be as fast as a traditional database, but fast enough to do many things in e-commerce.
Yeah, I think you're right. The issue of payments that you brought up is kind of something that's been on my mind lately. I was thinking about just kind of the ridiculousness of having digitized money, but you can't do anything after 5 p.m. or on the weekends.
Yeah.
And I wonder, because back in the early days of Bitcoin, my friend and I, we were excited about the technology. We'd use it, and he got me into it, sent me, at the time, $10 worth of Bitcoin, which is a lot now. And, he said, find a way to use this. So I think I got like a Starbucks gift card somehow.
Yep.
There was a little bit of change left over, and I was excited. And then I looked at the change the other day, and it's like over $70 now. And I thought, man, that's insane. But it just makes me wonder, what happened there that we didn't continue using Bitcoin as, an internet cash, which was the original kind of method. I remember, like you said, the fees at one point were more than some of the actual transactions.
Mm-hmm.
And micropayments is something I've really wanted to institute on this show for a long time. If anybody wanted to help support any of the production costs, but it's just, I haven't really found a good way to do that other than put our addresses out there and people can donate if they want to. But what do you kind of see happening in the payment, in the crypto side of things, or is anything you'd like to comment there?
Yeah, well, what I would tell you is, yes, it's true. The original thinking for Bitcoin when the Bitcoin white paper was published was, hey, isn't this going to be like this amazing thing. And there are some benefits when you tokenize. As you said, you don't have to store something in a bank. You can literally conduct a transaction with anyone in the world who's got an internet connection and knows how to accept it. But what doomed Bitcoin was that, other than the fact that superior things came along, but they came along because Bitcoin wasn't working, was the fact that, one, obviously you do have this fee issue. The design of the Bitcoin blockchain was really impressive and brilliant, but like many things, it had some drawbacks. One of which was that all of the fees, all of the value, the inflation from Bitcoin goes to one group, which is the miners. So if anything, I would say, and the miners secure the network, right? So, but if anything, if you had a company and all you had $1 million a month to spend on headcount and rent and insurance and marketing, it's unlikely you would spend all $1 million every month on the security for your servers, right? Because of its decentralized nature, it's sort of hard to set up a Bitcoin, public relations office. I get that, but it is just a maybe an unavoidable but a significant drawback that we overproduce security on the Bitcoin blockchain. It doesn't need to be as secure as it is, and we neglect other things. And one of those things is making it useful as a payment, because it is volatile. Not really volatile in the second by second or minute by minute time frame, but if it takes, let's say, on average, by design, 10 minutes for a block to be confirmed, and let's say you would like to have maybe at least 3 confirmations before you think this is a solid transaction. Maybe you make it 2, but that's 20 minutes. That's a long time to wait to close out your shopping cart online, right? So that makes it difficult. And then because of the fees, and right now those fees are, I don't know, last time I looked, they were, I think, over $10. Because of the fees, you run into this problem where any sort of sub, I don't know, $50 transaction, even $50 is kind of unreal. Hundreds of dollars, really. I mean, when I looked a few days ago, the average transaction fee was about, I think, $18. Median was a little lower, maybe $10. But if you're even a merchant and you're doing a $100 transaction and you're making somebody wait 20 minutes to check out, and you are assessing them a $10 fee, and by the way, the fee changes every block, right? Because the miners are changing things. That it's just totally impractical. And I would say Bitcoin is the worst payment platform ever invented in history. It is. It's just terrible. With maybe an exception being cross-border large dollar value transaction. It's pretty good for that. Right? I like the speed at which I can send somebody $100,000 in settlement, because I don't mind paying $10, right, for that. But for the consumer mass market, the average online transaction might be $15 or something. It doesn't work. What does work, frankly, is a stablecoin. I don't think any crypto that has price volatility, which is basically any crypto but a stablecoin, is ever going to be mass adopted. And if you look at like what Visa and Mastercard are doing after all these years, they're going to be allowing people to use stablecoins. Now, by the way, they will allow people to use stablecoins in a way that totally neuters the value of a stablecoin and only benefits them. That I am sure, but they see the value. I mean, Americans, I think, especially, just cannot comprehend or appreciate the ability to hold multiple currencies personally, wrapped in a framework that allows you to not have to hold them through a bank and not have any intermediary that is going to either impose costs or time on your transaction. That is the marvel of a stable coin. The fact, ask anybody, hey, can you easily hold yen, euros, British pounds, dollars, Canadian dollars, the Indian rupee? Can you easily hold those and send them at will to anybody in the world and not worry about currency conversion? No. And why currency conversion is such a huge issue is the world, in an $80 trillion global economy, the world, businesses and consumers are dealt a $1 trillion annual cost of currency conversion. Think about that. That's, over 1% of global GDP is just captured by mainly groups licensed by states to do money transmission and foreign exchange conversion. Since biblical times, governments have closely regulated and guarded who can do that because of the fact that they make money by printing money, right? The ability for us to send dollars, the ability of a Chinese citizen to hold thousands or millions of dollars and never have to deal with the dollar to RMB conversion rates. I mean, it's extraordinary. And so that is what is going to be used. Stablecoins are going to be used for all payments. And I would even go a step further and say by 2030, I think all of the largest global economic powers will have tokenized their currency, and we will be completely done with digitized currency as it is done today.
Yeah, that's really interesting. You said something earlier about gold and Tether Gold. I remember seeing something about that a while ago. Just the idea of having a token to represent gold, which,
of course,
tell us about that, because I've always been interested in gold. I always wanted to own gold. Never knew how to go about it.
Yeah, well, the tokenization process, probably beyond the scope of this conversation to really get into why and how tokenization is superior than digitizing. But we'll use shorthand here and just say it's more secure, it is more reliable, and it does not require intermediaries of any sort, other than if you have something physical that needs to be accounted for somewhere. So let's assume we have an asymmetrical risk situation. And by asymmetrical risk situation, I mean there is one party in a two-party transaction that is completely trusts the other, but the other party doesn't trust them. A good example here would be Amazon. And let's say someone I'll pick a random country with a lot of credit card fraud, the Ukraine. So a guy in the Ukraine probably feels no worries about taking his credit card, giving it to Amazon and buying something. He doesn't think Amazon's going to go scam him. Amazon, on the other hand, isn't so sure about that guy because that guy hasn't spent hundreds of billions of dollars building up a brand. So in that sort of situation, a group like Amazon can, if it wanted to, tokenize some gold, meaning it has a quantity of gold. It gets audited by whoever audits them, Price Waterhouse or whoever it is. And they say this gold is here. And most of us are like, Amazon's not going to scam us because they've got a $2 trillion brand to maintain. And so they can then issue you this tokenized gold, which if they wanted to, I don't think they would because it's really not in their business, but they would issue it. And now you would have the equivalent of a Bitcoin, but it has a certain quantity of gold. They could do it two ways. They could actually in real time generate a token that would give you at that moment in time, let's say $100 value of gold. Now, instantly, once they give it to you, it's going to change because the price of gold changes. more than likely they would just give you a quantity of gold, right? They would say this is 1/100th of an ounce. And now that we've tokenized it, and now assuming you trust that if you needed to, you could redeem that token for that physical gold somewhere, but you would never need to redeem it. You could always just sell it, because there's lots of people who, just like they like to hold Bitcoin and any other token, WAX if they want to buy NFTs, Tether if they want to hold dollars but outside of a bank, they may say, I'd also like to hold gold. And frankly, gold is expensive to hold. They charge you an annual fee to store it. And let's face it, what do you do with it other than go online and look at your balance? Because you can't give it to anybody. The minute you take a physical piece of gold and you try to give it to somebody, the first thing the guy's going to say is, I don't know if it's real. But if we assume you trusted that the issuer of that original token backed by gold was legitimate, then now you can break down, if it was, let's say, done on a forked version of Bitcoin, you could break down that 1 ounce quantity into 1/100 millionth of an ounce, because Bitcoin is divisible to 1/100 millionth. That's unbelievable, right? I mean, Jesus. And if it weren't for the fees on Ethereum, on a Bitcoin, but assume you did it on WAX, assume WAX decided to tokenize a gold, there'd be no cost to you to trade it back and forth. It'd be amazing. And I think that will eventually happen. You will see lots of people tokenizing things. WAX invented a really cool concept many years ago. We decided, after my partners and I created Tether, we kept thinking, what else could we tokenize? And everybody talked about tokenizing stocks and tokenizing gold and tokenizing real estate. And frankly, that was never that interesting to me. What was super interesting was tokenizing consumer products. And in fact, we did that. And we called these NFTs virals. And that stands for virtual, the V, IRL. IRL is in text speak in real life. You might have seen that, right? Somebody says IRL. So we put together the letter V plus IRL. We call them virals. They're virtual and they're in real life. And the first thing we tokenized was a sneaker in 2018. And when we tokenized that, it traded over 200 times the very first day. And that told us this is going to be a huge, huge thing. And the other thing we did that was very, very smart is we filed massive amounts of patents around this concept, the tokenization of consumer products, for a lot of reasons, because I knew other people were going to do it and we didn't want to be prevented from doing what we did. And so you will see us rolling out virals soon. In fact, today, a toy company called Funko that makes figurines, they license characters from like Disney and Marvel and Hasbro, Mattel. They make these little toy figurines. Big company too. I think it does over $1 billion in revenue. They just licensed the viral technology from us. So they are going to be selling viral NFTs where they can be redeemed for the physical item, or you can just trade the digital version of it. By the way, that is, I think you would agree, that is just what most people have never thought of this concept, especially when I remember I presented at a Goldman Sachs conference, I think it was in 2018, where I rolled out this concept, and it was very, very nice. A group of Goldman Sachs bankers who were there watching me said, we've never had so many people in our audience marvel at what you just presented. They're like, wow, you're going to tokenize stuff in consumer products. And I said, I actually believe every consumer product on earth that cannot be eaten will become an NFT, will become a viral. And there's many, many good reasons for why you would want to do that. But this is just another use case, of a blockchain. Of course, you couldn't really do that on Ethereum or Bitcoin because the fees are too high, the transactions are too slow. So we think Wax is a really good chain to do that with. No matter what, I know there's a lot of people out there who are like, I don't ever want to hear about blockchain. I've heard about it for years. I don't care. You're going to care because it's going to make your life easier.
Yeah. Yeah, I agree. And that's really impressive, what you just said there. When I first heard about NFTs, I think it was 2 or 3 years ago, I wondered, how's that going to work? Are people just going to look at them on their computer, or are digital picture frames going to make a comeback? Or like in the future, is there going to be holograms?
All the above.
Yeah, it's really fun to think about. And there's always these new use cases that I just never thought about it. And then it's, boom, there it is. Kind of like, I heard this years ago, like in the Jetsons, when I think Elroy, this teacher, was writing a note home to his parents on a piece of paper because they didn't think about email yet. And
right. Yeah.
And it just makes me wonder, what's next? What's going to come?
Innovation. We thought the pace of innovation during the internet era was fast, and it made a lot of, old guys and big companies go, when is this going to slow down? You know what? With crypto, because it's permissionless innovation, you don't have to ask anybody to go take a blockchain, fork it, and do something cool with it. The pace is not slowing down. And my God, if you look at NFTs, like what we're doing, we're pushing the envelope way out there. Now we're doing augmented reality. And if you look at decentralized finance, which really, really exploded last year in 2020, my God, I mean, my family office does a lot of trading of cryptos. We were very interested in DeFi, mainly because we had so much Ethereum, but that it became an impossibility to keep up. And in fact, whenever somebody tells me they're DeFi experts or, God forbid, crypto experts, I say, the one thing I know is if you think you're an expert, you are definitely not. We are all students. We will always be students of this stuff because there's unlimited abilities to do things either better than how they're done today or do brand new things that couldn't be done before, like tokenizing consumer products. You just couldn't do that before, because if you got a digital item that said, oh, you can use this and redeem it for a Funko toy figurine, well, how do you know that's not just somebody copied that digital object and gave it to you? It would be no better than an emoji. And that's the marvel of tokenization. And so we are still so early in this. I mean, 5 years from now, it truly is. We can't imagine how things will have grown around blockchain. And I used to think maybe half the industries of the world would need to understand blockchain because of its impact on them. And now I believe every industry, and industries not yet invented, will ultimately be entangled with various aspects of blockchain.
Yeah, that's very well said. Since Bitcoin is pretty popular right now, I was just wondering if you had any predictions about Bitcoin for the rest of this year. And if you don't really want to talk about Bitcoin, just any other kind of predictions you have for this industry.
I think Bitcoin is fine to talk about. I've been, since we trade it, it's near and dear to me what the price is. I would even tell you I was very surprised at what happened to Bitcoin in the past 6 months. And it surprised me in this way. We used to be able to rely pretty well on the fact that Bitcoin followed historical patterns. And for instance, whenever Bitcoin had in a given quarter increased by more than 100%, it had never finished in the next quarter in positive territory at all. Well, it was up 200% in Q1. So I figured, well, it's going to be flat in Q4, I should say, Q4 2020. It was up 200%. And I assumed, based on historical patterns, well, it's probably going to be flat in Q1 2021. Well, that didn't happen. It doubled. It went up 100%. Q1 historically has been Bitcoin's worst performing quarter. I think in maybe 5 of the last 7 years prior to this past quarter, it had been down. It was, on average, it was a loser quarter. And so it had gone up in such a tear in 2020. Usually, as you know, if you've been following it for years, it takes a breather, right? People hit a price point and then they pull back and they sell a little. Well, that just didn't happen. I was looking at the exchange traded options markets because we trade a lot in those markets on Bitcoin. The volatility of each expiration date was way higher than it normally is. Volatilities are usually like 90 to 100. They went up to like 170 during Q1, which just means people expect a lot's going to happen with this thing. And it's, in terms of where I think it's going to finish up, it's always a random guess, but I'm betting with my money that Bitcoin will exceed 100,000, and I'm actually thinking closer to 150,000 over the next 12 months. The end of this year, well, the markets, the exchange traded option market. So this is where people actually bet with money. They're not just empty words. There is a lot of people putting bets that it's going to exceed 100,000. And there are people placing bets that Bitcoin will be over $400,000 dollars by the end of this year. I think that's way too optimistic, but call it between 100,000 and $150,000. I think is very, very comfortable prediction. And let's keep in mind that means Bitcoin would only have to go up like 60% from here through the rest of the year. Well, it just went up 100% in Q1. When you think about it, even to hit that fabled $1 million per Bitcoin, right? In order to hit that now, it has to go up like 15 times, 16 times. Now that may seem like a lot, but a 16-fold increase for something that has gone up thousands of times. I think I was always a little skeptical, but now I believe Bitcoin will eventually hit 1 million. Not in the next year or two, maybe around the time of the next halving, 4 years or so from now, but I guess 3 years. And having said that, I would be more bullish on altcoins right now, simply because Bitcoin has had a big run. Even if it hits 150,000, that's just a 2.5x multiple. And the altcoins are capable of going up much, much more simply because of their market caps, right? They're much smaller. I think the alt season is this year, and we've seen it in spades. I mean, WAX is up 1,000% in the last year. So, these are good times to be in crypto and to be doing NFTs.
Absolutely. I think you're right. And that was very exciting. Very exciting to hear that prediction. Very, very appreciative for your time with us today. If there's anything you'd like to leave us with, please feel free to.
I would just say, if you are a consumer products company and you're looking at NFTs and wondering, stop wondering and start doing. They're going to be very important to the consumer experience in every consumer products industry. And I think WAX will be one of the companies providing a lot of innovations for companies and people to use NFTs in new ways.
Absolutely. Well, Mr. Quigley, thank you so much for your time. It's been an absolute pleasure speaking with you today.
Thank you.